Okay, so now we move on to the balance sheet. So I have some accounts up here and I have a few down here. So I need to take care of all these accounts. I've already used these two that are highlighted right here, so I just have to figure out what to do with all the rest of them that are in yellow. So the balance sheet changed last chapter, and so you've already practiced some of this, but we'll practice it again. Luckily, some of this is pretty easy. Okay, cash. Cash is cash is cash. Accounts receivable, and everything goes over here in this right-hand column. Prepaid rent is 2,000. It's not till we get the assets that any of this changes. I'm just bringing these straight over from the to 1,000. Okay. Now I have office equipment. It's going to go over here in this column of $12,000. The office equipment has some accumulated depreciation. I get that from right down here of accumulated depreciation. So I write the word less because we're going to subtract it. Accumulated depreciation of 200, and I'm going to put that in parentheses because okay, and here's some crazy formatting stuff that happens. Okay, I'm going to take 12,000, I'm going to subtract 200, and the balance is going to go right on the same. What this means is I still have $11,800 left to depreciate of that asset. That's why I need to know that number. So that when I go next month, I can look to see, do I still need to depreciate $10,200 less accumulated depreciation, and according to my worksheet, my accumulated depreciation over here is 170. I'm going to put in a formatting line because I'm going to subtract those numbers. Give my computer a second to get caught up. It's kind of doing weird things, but I've got videos processing in the background and all sorts of crazy stuff going on, so I think it's tired today, much like me. Now I can get my total assets. Take it, this column right over here, and add these straight up or straight down. I don't know. It could be whichever way you wanted it to be, up, down. And I get total assets of $33,890. I put a double line under here. Seems like every time I hit a formatting line, like my computer kind of flips out. I don't know what's up with that. Okay, so I have used every number on here except accounts payable and salaries payable. So those are my liabilities. I can't spell, so don't be like me. Okay, accounts payable is my first liability, and my accounts payable is $6,800. My second liability is wages payable. Sorry, salaries payable. Let's use consistent account names of 150. Formatting line. Total liabilities. Add those two up, I get 6,950. Okay, last section, owner's equity. Okay, So here's the number one error in this class. You're like, oh, owner's equity is 26,200 on the worksheet. Wrong answer. You've already used this number. You can't use it again. You have to go back over here to your statement of owner's equity and pick up 26,940. 26,940. So my P Monroe Capital is 26,940. That comes from my statement of owner's equity. So now total liabilities and owner's equity. I add up these two numbers and I get, it's the weirdest thing what it's doing. 33,890. I almost hate to put the formatting lines in because I know the Excel's going to do all sorts of weird stuff. Look, I am magic. These numbers match, and so are you. Fan-freaking-tastic. Okay, so I'm going to pull back up Canvas. We keep referring back to this. So we have now done steps 1, 2, 3, 4, and 5 in order. So now I'm going to gather back up my general journal and my ledgers, and I'm going to start journalizing some things. So it says journalize the adjusting entries from the worksheet to the journal and closing entries in the journal. Okay, so here is what this looks like. Okay, so now I need to go, and I still need my worksheet up. So my worksheet is up, and I'm going to go and I'm going to scroll back over here to the adjustments column, and I'm just going to be looking at the adjustments column. I'm not going to look at anything else. Okay, I'm then going to go over and I'm going to pull up my general journal. I'm on page 2, and I am going to write a heading right here. I'm going to pause the video for a second and figure out what in the world is going on with my Excel. Whew, it started working again. I think it was trying to upload a video and render the process. The computer has to do something called render the video, which is turn it into a format that'll upload to YouTube, and sometimes it just takes a lot of work for the computer. Okay, so I am going to, right here, I'm going to go back into my general journal, and I have to journalize my adjustments. So I have prepared my worksheet, but those actually haven't gotten to my general journal. Everything that we do in accounting has to go through my general journal. So I write the words adjusting entries, and I center it. Well, maybe Excel is going to behave itself. Okay, so I put in a heading that says, should say adjusting entries. And now I don't have to do description. Entries. So now I don't have to do any of, I don't have to do any descriptions because they're all adjusting entries. Okay, so here's what I do. I look over here and I look and I find adjustment A. Adjustment A has, and we're going to date these all the 31st, adjusting entries has a debit to snow supplies expense. So I copy a debit over here. And the process that I am going through is I am getting these so that these are in the general journal so I can make sure I have a complete set of financial records. And then I go and I find my credit for adjustment A. Oop, I got off the adjustments column. For adjustment A, I have a $200. So I have snow supplies of $200. Okay, I skip to the next one and I journalize adjustment B. Adjustment B is a debit to rent expense for $400. I go and I find adjustment B. I just highlighted it over here. My credit is prepaid rent of $400. I do depreciation expense. Office equipment is my next one, and I do that for $200. And accumulated depreciation office equipment of $200. Depreciation expense. Snow equipment of $170. Accumulated snow equipment 170, and salaries expense 150. And I know you might write slower than this, just pause the video. You're okay. Salaries payable of $150. Okay. Awesome. So now I have to post these ledgers. I have to post them because I don't have them done yet. So I think in Canvas, let's pull it up really. Give me just a second. I've lost it. I'm sure you're shocked by that. Okay, so the instructions here say journalize adjusting and closing entries. So I'm going to go ahead and do the closing entries, and then we're going to post them all at the same time to the ledgers. So we're going to do all the journal entries and then go to the ledgers. Sorry. My brain is a little scattered. These videos take a really long time to work or to record. So like I've been working on this project like 3.5 hours, and my brain is starting to, rebel. Okay, here's how closing entries work. When I go over here, I look at my income statement, and I only look at the accounts that are in green and are on my income statement. That is it. I'm just looking at my income statement column. Okay, we need to zero these accounts out because next month we want them to start over. So like all the rest of them on the balance sheet, they're not starting over at the new month. But when I start over in February, I need my plowing fees account to be a 0. I need it to be a 0 so that when I go through and get started next month, I can figure out how much money I made just next month. Okay, here's how closing entries work. You write the word closing entries, and then you don't have to do descriptions. It's really kind of nice. Save you some writing. Okay, on the 31st, here's what I do. I take, and this is a $13 credit, so I'm going to debit. So here's what this looks like. Plowing fees. I'm going to debit it. I'm debiting it because I'm going to close it out. So if you take this credit and add this debit, the account's going to go to 0. That's how you know that you're getting to 0. And the other side of this entry is income summary. Income summary is a temporary account that we use to close out accounts. Temporary account that we use to close accounts. Okay. So now we need to close out all the expenses. There are debits on here, so in order to close them, we have to credit them. I'm actually going to have to go to my next general journal page. And if I forgot to, oh no, I did date those. So January 31st. So these are all debits. I need to credit them. I'm going to skip my debit line, and I'm going to go to my credit of salaries expense. And my credit is $2,350. Advertising expense of $800. Telephone. You guys can make fun of my spelling later. As I go down this, I start seeing all my spelling errors. Like salaries expense. Wow, that was super amazing. Snow supplies expense. Again, I'm crediting these because they're a debit on my worksheet, and I need to close them out. Rent expense of $400. And basically that's what this chapter was adjusting and closing entries. So we're also covering what was in this chapter. 200. And on part of the problems in the chapter, they'll say, oh, here's the completed worksheet. Now do the closing entries. It's kind of nice. Okay. I close these all out into an income summary account. Income summary is the account that we use for closing. 8740. I just add up all these credits. The other place that I can, oh shoot, that's the wrong number. 4260. I apologize. Sorry, 4260. The other place I can get that number is right over here. I just highlighted it. 4260 is the total of all of my debits over here, so it's going to be the total of my credits over here. Okay. The next thing I do is I need to close out this income summary account. Here, the income summary has a credit balance of 1300. Here I debited it for 42. So over here, I'm going to go and I'm going to do this little T account. Income summary, debit, credit. Okay. This is if I had a debit, or if this was if I was doing a T account. I don't do a T account, but I'm just trying to make a point and show you how to figure out this number. I have to now close out my income summary account, but I also have to figure out what is the balance in this account. So if I were to do the balance in this income summary account, I am going to get 8,740 credit. So in order to close it out, I need to debit it by 8,740. The balance is 8,740 credit. I need to zero it out. So I'm going to debit it. That's where I get that number though. I'll show you another cool trick in just a second. Let me get this written now. Income summary is a temporary, I just keep saying this because people are like, where'd that income summary? We just use it for closing. It's just a temporary account. Okay. 8740 matches my net income of 8740. It's supposed to. We're super cool. We just cleaned out our net income into capital. That's kind of the whole deal, is we're making sure everything that is supposed to go to capital ends up there. Now, I have one more account that I need to close out, and it's on the balance sheet column. Just this little one right here, withdrawals. I have to close withdrawals out to capital. Right now, here is a debit, so I get to credit that account of P. Monroe withdrawals of $8,000 and P. Monroe capital of $8,000. Pretty cool, huh? Okay, that is it for the journal entries. So if I were to go back over here, it says journalize adjusting entries from the worksheet to the journal and closing entries in the journal. The last thing I have to do is post adjusting and closing entries to the ledgers. Like, that's the last step I have. And then I guess I have one more step and it's missing off this screen, and so I'm going to have to go in and fix it. I also need to create a post-closing trial balance. So I am going to pause the video and I'm going to go ahead and post all of these to the ledgers, and then I'll come back and show you what the completed ledgers look like, and then we'll do a post-closing trial balance. But I do need to point one thing out. So for example, my very first adjusting entry is right here, and it's into snow supplies expense. Snow supplies expense. So I'm going to go find my snow supplies expense account. And right here, January 31st, in the explanation, I write adjusting. I do write adjusting. That's the only time I use the explanation, is when I'm doing adjusting and closing entries. So fortunately for you, it's kind of an easy thing. You don't have to include anything there unless it's adjusting and closing. So now I'm going to pause the video and go back in and post all of these to the... Okay, When you're done, I just pulled up the answer key to save some time. So when you're done, your journal entries should look like this. So for example, prepaid rent had an adjusting entry of 4,000. And now this balance right here matches my worksheet. The balance on the worksheet is 2,000 and now the balance in my ledgers. That's part of this process. So I just went through and did all the adjusting entries, but here's what I want to point out. My ending balance in my capital now matches my statement of owner's equity. It's supposed to. That's how this whole process works. My income summary was a temporary account that I used to close out my, or used during closing to close out my accounts. It has a 0 balance and it's supposed to. And then all my revenue and all my expenses, anything that was reported on my income statement now has a 0 balance. Every single one of these moving forward has a 0 balance. Okay. So we have one last step. Let me pull it up. We do what's called a post-closing trial balance. So here's how this works. I go and I go to the very top of my ledgers and I write the word cash and I copy over the balance. I wish Excel would quit doing this. I copy over the balance of anything that is left open. Accounts receivable is a $5,000 debit. I copy them all over. Prepaid expense has a balance of 2,000. I go down all my ledgers. Well, I only have to copy to, I'm gonna scroll. Sorry, I know you probably can't read it. I only have to copy to this capital account because everything below it, all the withdrawals, income summary, everything below there is 100%, it has a 0 balance. So when I prepare post-closing trial balance, it's going to, I'm sorry for the scrolling. I know it's really hard to see on your guys' end. It's going to look like this. So this, I list out every account and its ending balance. And when I get down here, I have, and then my columns match. So these are formatted a little bit slightly different than what your workbook is, but at least now you got the good idea. The publisher also puts in all the zeros. You don't need to put in any of the zeros, none whatsoever. I apologize, the last little bit of this video was rushed, but like I said, I've been working on this for 3.5, 4 hours and I'm tired. And I know you are probably tired and ready to be done watching this video. Now, the problem that you are going to complete in the book, I was kind of stumbling around that and I apologize. I don't believe you have to do a post-closing trial balance in this problem. I don't think it asks you to. You know what? Let me look. I'll bet it does, and I bet my instructions are wrong up here. I will correct those instructions, and I apologize for that error because yes, you do need to do a post-closing trial balance on there. There is the entire accounting cycle. I hope that it pulls all the work that we have done for the last 3 chapters all together. And you are going to start a project next week where you're going to do this accounting cycle twice for a realty company. As always, if you have any questions, please don't hesitate to email me. And I look forward to seeing your problem 5B3 after you have completed it this week. Have a great week.